Will Billy show how to find the DLCs on their platform?
We can check with him.
Yeah, never mind, it's not last time.
Right. All right. So hi everyone. We are going to start our webinar very soon. All right. So before we start, let's do a mic test. All right. So let's say if you're able to hear my voice, there's a chat button below. Then you can just say hi to me. Right. So I just make sure that our voice are clear. Okay. Hello. Hi, Amir. All right, so today we will be start our session at 8. So today will be very exciting topics. Hi, Robin. So later on today we also have two speakers will be share on this topic. So we will be starting very soon. So let's say if you have any friends will be joining in, so can let them know that we already started and we will be starting soon. All right. Right now it's 8 already. All right. So without further ado, maybe let me just set up for the live streaming also, right? So just hold on one sec. Hi, good evening, everyone. So thank you and also welcome to our webinar for this session. So we today actually we are very happy to have two speakers over here. First is actually Billy, the regional head of retail research from CGS International Singapore, and also Marcus, vice president of Society General. So today we actually very happy to have them over here to share on a very exciting topic. So the topic today is trading the bull market into 4Q 2025, capture US and Hong Kong opportunity with DLC. So today we actually will cover different topics on this. So it's a very exciting session. So for these sessions, you were able to learn more on US and Hong Kong, and also how are we able to increase your ROI and also to do leverage as well. So without further ado, maybe let's welcome Billy. Hi, Billy.
Hello, hi.
Hi, good to have you here.
Thanks for having me. Yeah.
Yeah. So maybe I will just pass the time to you.
Okay. Yeah. Let me just share my screen first.
Yeah, sure. Okay, let me just stop shares also. Okay, so yes, looking is the full screen mode already.
See, right?
Yep, can see.
Okay. All right. Thank you. Right. Today we'll be talking about the Hong Kong and US DLC strategy playbook. How can we ride on some of the momentum, right? So I'm Billy To. I'm the regional head of retail research at CGS International. So basically, I look at the stock markets in various region, and then I share some of these stock ideas with our retail clients at CGS International, together with our research team. All right. Before I start, let's just quickly go through a disclaimer. This is not a buy or sell recommendation. It's basically a education and awareness webinar. So if you have any questions, or if you can ask at the end of during the Q&A session. But if you want to make any investment decision, please do talk to your financial advisors, because they are probably more familiar with your overall investment portfolio and objective. All right. So before we jump in on some of the instruments, we will just quickly go through the global market overview. But for those of you who do not know what DLC is basically the daily leverage securities that allow you to take advantage of the leverage portion of it, and the underlying securities, of course, is in some of the Hong Kong and US stocks. I think Marcus will share a bit more later on how you can take advantage of it. I will also share some tactical playbook that you can use. Right. All right. But before we do that, let's just quickly go through some of the global market overview in terms of how the market has performed. All right, I think if you look at recently, I think it was just last week, fund flows actually turned positive into the equity market. The first net inflows in 3 weeks. This is based on the London Stock Exchange data. So you can see 28.4 billion actually flow into the equity market. And the clear winners, and in the second chart, you can see that the clear winners are actually your industrials. You can see the red color here, and then the financials, which is your green, and then of course your technology companies. So there are quite a bit of interest on that front, right? But what is interesting is that despite that first inflow into the equity market for the first time in 3 weeks, we actually saw that the stock market came down a bit last week. Basically, if you look at the table here, you can see that it shows the various performance in various markets. If you look at US, it actually turned red last week. And then if you look at in Asia, a lot of the markets actually turned red last week as well. So compare that with the year-to-date gain, you can see year-to-date, the world index actually was up by about 17.7%, right? But last week, it was actually down by 0.5%. Now, part of the reason was because despite the new fund flows into the equity market, there was quite a bit of profit taking and policy jittery, partly due to some of the announcement by the US administration under Trump. So you can see that with the exception of Europe, that actually held relatively well due to its value rotation team, which was supported by flows into your banks and industrial. Now, if you look at some of the macro tailwind and risks that we are looking into, of course, it is the AI mania for round two. I think Nvidia announced the investment and collaboration with OpenAI, $100 billion infrastructure deal. So that's something that investors will probably want to pay attention on in terms of the development of it, because it shows that the capex into the AI team play continues to remain strong, at least at this point in time, right? Then, of course, another thing is your Fed rate cut. I think in September, we've seen the first rate cut since December 2024. So market is pricing in another rate cut in October, and 88% of that, right? So if you look at the fund flow also just now, I think let me just go back to that for a while. You can notice that it's not just the equity market, actually it also goes into your bond market as well as your gold. So what this means is that I think there is a bit of hedging and diversification amid some of the concern in terms of the risk as well as the valuation risk. I think there's always a concern that the US is currently trading at a slightly more expensive level. I think it's close to around 20 PE forward, so which is slightly more than its average level. I think, of course, your Trump policy, there is the renewed talks on tariff against the pharmaceuticals as well as exporters. So this will probably benefit some of the healthcare players in US, but you can see that this will actually affect some of the players in other markets. So you can see, for example, last week, the South Korea market, after rallying for quite a while, saw a bit of a decline last week. Now, some of the big picture market drivers that we wanted to keep an eye on, I think just to let you know, when you trade, one of the way for us is that before you decide in terms of what's going to happen in terms of for the market for the next week, we look at some of the big picture market drivers, some of the expectations and what we think will materialize going forward. Now, the first thing is, of course, your US Fed. I think the US Fed actually has a dual mandate, which is basically focusing just on the price stability and maximum employment. Now, the problem with it is that at current level, inflation has moderate, but it remains higher than the Fed's long-term target of 2%, which is, I think, currently is at around 3%. I think it came down further a bit in the latest data, but it's still at a close to 3% level. And then, of course, US job data is starting to show some weakness, with revision showing that your unemployment level in US is higher than initially expected as well. So you can see this is why when the Federal Reserve cut the rate in September, they actually call it an risk management sort of measure that they're looking into. It's more like they're just preparing for just in case if the economy is weaker than what they expect it to be. So the Fed do see some of the crack forming in the labor market, but it is not ready to declare victory over inflation, which is why you can see that that market is not too sure whether there will be an aggressive rate cut going forward. In fact, if you look at the Fed dot plot, you can see that they're only expecting another 2 rate cut this year and probably another rate cut in 2026. Now you can see this dot plot here. You can see that suggests that there will be another 2 rate cut. This is the 2025 number. So you can see the average is at 3.8% and the median is at 3.63% level. In 2026, they expect another rate cut. So we do think that there will be our house view is in line very much with the Fed dot plot, but we do expect that in 2026 that there will be another 2 rate cuts. Now, in terms of the US market, valuation is at near record. Not valuation, is the index is at near record high. So despite some of the tariff impact and rising geopolitical tension, if you remember at the start of this year, I think in April, right, when Trump announced the tariffs on all the different countries, the market actually tanked, right, quite a fair bit. And then you can see this drag on to the rest of the market as well. In fact, despite the near record high in US market, the US has actually underperformed the rest of the world this year. So you can see just now the table, the US is trading between 10 to 17%, which is below the global market performance for the year to date. Right, valuation is a concern and expectations are high on earnings to deliver going forward. So these are some of the key risks to really take into consideration. Now, your key catalyst would be your Fed rate cut. That would be a signal of risk management and support on the economy. If let's say the rate cut is slower than what is expected, or the Fed that dot plot and some of the commentaries are less on that front, then we might see some reversal in terms of the movement of the stock market, especially among the growth and tech players. Then there is also your AI and semiconductor strength. I think the Nvidia Intel potential tie-up has helped to fuel some of the capex boom as well. I think the latest announcement on the open AI is also another thing. So do pay attention on some of the announcement, especially during earnings when the tech companies talk about their investment strategy going forward. I think that will very much tell us whether the tech companies are going to continue to invest into the AI, right? I believe going forward, this will spill over to other corporates, which will also increase their investment into this area. So we should want to look into how much AI will come into play among the listed code. Now, policy noise, I think this is something that we will face in the near term. The government shutdown deadline is something that we want to take a look at. I think there is a lot of talks on that. So I think in the previous Trump administration, during the Trump last term as a president, I think there was a government shutdown that lasted for quite a fair bit. And the market do initially react to that news and development. So we do expect to see some pullback in the event of a government shutdown. Then there's your tariffs, Supreme Court case in US. Those things also add into the uncertainties in terms of how much some of these trade deals that the US have actually signed with some of the other countries and how they're going to recover some of the tariffs that they've collected, right? Then if your Trump sees summit ahead, but to go ahead, then this could probably boost some of the market sentiment in terms of it's a positive news. I think this would be some of the things that investors will really keep an eye on. Other market catalysts and risks to look at, your US inflation data. I think the headline number is at 2.7 year on year. Core level is still at 2.9%. It is easing, but it is still above target level. So I think we need to continue to pay attention on these numbers because at this point, I think some of the concern is that the impact of the tariff has not been fully priced into the inflation number. Yes, some of the corporates will probably absorb some of the increase in terms of the cost, but I believe that some of those will eventually be passed on to the consumer, and how much that will affect the inflation is something that investors need to keep an eye on, right? So if it were to be higher than we expected, or if the moderation of the inflation were to be slower than what was expected, so do expect the market to react to it, because this would actually make it harder for the US Fed to continue its rate cut cycle. I think the first one is linked to the second one, basically your rate cut odds for the October FOMC. AI capex wave is also another. I think I talk about that. The fourth one is more linked to your Hong Kong market. I think we've seen a strong momentum in the Hong Kong market this year so far. In fact, average daily turnover is at about 240 billion in the first half of the year. You can see there's also a revival in the IPO market. So in fact, it's reached its Hong Kong exchange record pace level. So these are some of the positive momentum that the Hong Kong market is facing. I will share a bit more on the Hong Kong based on the specific companies later. Right, in terms of the oil context, I think Brent slipped a bit on some of the resumption of the Kurdistan export, but I think there's still a lot of concern, especially on the geopolitical front. I think Trump just announced the 20-point peace talk that he thinks that will work for the Middle East. Is something to keep an eye on. If there is no deal, so this might actually affect some of the supply for the oil. Also, how the sanction against the Russian oil and whether Trump will be able to pressure the Russian to stop using the oil from Russia is another thing to look into. All right, now let's jump into some of the specific stocks, right? So I think some of the highlighted stocks today will be your Nvidia. So I think Nvidia has become the largest company by market cap size this year at about 4.3 trillion. So EPS growth is strong at a double digit, but valuation wise, it's not cheap anymore. It's at about 40 PE. level, I'm sure a lot of us are aware of what Nvidia is, but in case if you do not know, it is the leading semiconductor and AI computing company. So it designs GPUs, your AI chips, as well as high performance computer. So basically, whenever we talk about AI infrastructure, Nvidia is one of the first key beneficiary. In fact, it is the leading player in this space. So it has become the core component of the Nasdaq 100, which is your tech growth team as well. Now, some of the latest developments for Nvidia. So if you look at the Q2 earnings is one of it. The revenue has increased by 6% quarter and quarter and increased by 56% year on year. Your data center revenue remains impressive at 41.1 billion, with Blackwell data center growth at about 17% sequentially. Right, so there is also a margin, and if you look at the margin, remains strong at about 72.4%. For the gap level, and there's also a buyback, share purchase buyback that the company has approved of. So this will all help to support the share price in the longer term basis. So it will be interesting to keep an eye on Nvidia earnings, I think, in early November, so that when they announce whether they can actually maintain that sort of momentum, right? But some of the key risks to take note of is your China risks. I think in first quarter this year, Nvidia actually incurred a 4.5 billion charge tied to the H20 export licensing demands to China. So I think in Q2 there is no sales to China due to some of the restrictions that the US has for Nvidia. It is also a concern in terms of how the Chinese players could actually replace other chips instead of using Nvidia. So I think a lot of the Chinese tech players have been talking about using a local made chip in response to some of the US chip restriction export. So these are things that investors will want to keep an eye on and to see how it will affect Nvidia in the longer term, right? So for outlook, I think there is quite a bit of positive guidance from Nvidia. So I think the strategic moves that we have seen is the partnership with OpenAI, as well as the chip roadmap that actually shared with investors. So some key dynamics and risks for investors to pay attention on is your AI demand leverage growth, right? So a lot of the enterprise and cloud providers are scaling foundation models, inference workloads, which actually help to drive that demand for the chip. Guidance as a market signal, I think forward estimates will continue to lead sentiment, especially in the tech sector. So if Nvidia forward estimates or guidance is positive, this could benefit the overall tech sector, especially those related to the AI thematics. Now, your geopolitics and export control is something that is going to be the key risk that we will have to pay attention on. And then, of course, the margin compression, right? So investors want to pay attention to see how the newer product lines, higher cost of R&D, and more complex architecture could compress margin. We do not think this is a serious consideration in terms of risk though. But on the valuation side, I think this is something that we want to look into, especially with valuation become more expensive. It will be something to keep an eye on if the US Fed could not cut interest rate as fast as anticipated. So there is a bit of correlation amplifying index impact whenever Nvidia move. It actually spread across the other indexes as well as the big tech index, your index as well as your S&P 500. A lot of them will be affected by your movement in Nvidia due to the high contribution. Now, aside from Nvidia, let's look at Tesla. Tesla has been a bit more volatile this year. I think it's going down initially due to some of the involvement with Elon Musk in the politics, but I think we've seen quite a bit of upside recently, especially following the news that Elon Musk actually buy into the company, right? So Tesla has continued to be the leader on the EV space. I think market cap is about 1.5 trillion. Revenue mix really rely a lot more on the EV as well as your energy generation, storage, and services. Now, some of the latest development with Tesla includes your delivery and production. I think that has disappointed quite a fair bit in terms of the delivery of the production. In fact, I think in the near term, the guidance for Tesla delivery has been rather negative, but some positive development includes your the launch of its robo taxi. So those are something that is positive for the company in the longer term. So Elon Musk continue to talk about some of the robotics, some of the AI features that they're rolling out. So these are things that investors want to keep an eye on. But in terms of focus right now, I think a lot of focus will be on the pricing as well as versus the cost cuts. I think the competition from China has actually affected Tesla quite a fair bit. So the software and energy storage scale up remains a medium-term pillar, but it's still not the strong foundation for the company at this point of time. For Meta, I think there is quite a positive bid for Meta. Mainly, for those of you who do not know, Meta is the owner of your social media, Facebook, Instagram, WhatsApp lah. So ads remain its core. But I think what's interesting is the venture that Meta has into AI, how Meta has continued to actually aggressively, in fact, hire some of the tech leaders in the AI space from the likes of Apple and other companies to join their company. So these are some of the positive developments for Meta. If you look at the ads results that they came out, it remains resilient. So the Reels and AI ranking has actually improved the engagement and monetization according to the company. So what this means is that Meta has actually rolled out a lot of the AI features into its ads optimization so that both the advertisers as well as the viewers could actually see what they want. I think if you look at your Facebook today, you probably felt that, you know, if you're searching for, say, grocery or whatever, you could actually see some of those ads, right? If you're just talking about investing right now, you'll probably see some of those ads later on. So these are some of the things that Facebook is doing aggressively. The ongoing spend in Reality Labs is also something to take note of. Of course, that could be a risk if, let's say, they're investing in loss-making ventures. So your Ray-Ban display smart glasses are some of those that they've been investing in. So it's launching in September 2025 with built-in lens display and neuroband wristband. So it's quite interesting to see how that adoption is, because I think Meta is pitching that to be the new form factor for user. I don't think it will make a big difference in terms of their revenue or their earnings at this point of time, but any news and development on the front, they will move some of the prices. So then there is your regulatory scrutiny. I think especially in US and EU that will continue to persist. But I do think that with Trump administration, the US is a bit more protectioning of their own American tech company. So that may be a bit of an upside for the company in the near term. Now, for the Hong Kong stocks, I will probably highlight some of those like your Alibaba. I think we have a strong buy call for Alibaba within our research group. Alibaba is strong known for its e-commerce, your Taobao, your Tmall, right? But it's not just that. Although e-commerce remains its main revenue generator, it's also venturing into your Alibaba Cloud, which is another growth driver for the company, as well as the logistics and local services. I think some of the interesting thing that you look at Alibaba is the latest news of the return of Jack Ma. So in fact, I actually wrote a report on that front, how the return of Jack Ma could actually add some of the positive sentiment for the company, because I think this is a signal that the Chinese government is actually going to allow some of these tech giant in China to grow and expand further. I think over the last 3 to 5 years, there's been concern in terms of the restraint on the Chinese government on some of these tech giants in order to protect some of their local players. But I guess with the US and China tech competition, we are seeing a lot more leniency on that front, right? So that really actually helps a lot on that front for the companies like Alibaba. Then there's the AI push. I think the foundational models as well as the cloud platformization is another key thing to look at. Of course, your cost discipline in its core business, which is the e-commerce. Competitive, it continue to be very intense in the e-commerce space, especially on the pricing side. I think the subsidy wars continue to pressure margins lah. So this is some area to really look into. But the company actually did announce some of their capex plan in the AI space. So these are some of the exciting stuff that the company is really doing. In terms of policy and regulatory tone, this is something that investors want to keep an eye on. But like I said, I do think that the Chinese government is more focusing on the competition between the US and China space. So we should see some moderation in terms of the restriction that they're looking into. In fact, I think Xi Jinping actually just praises Jack Ma not long ago in one of the news conference. So this is also another positive thing, right? Tencent, the super app ecosystem, there's also a gaming powerhouse. So there's also in their fintech and payment space. So I think some of the things to look at when you talk about Tencent is their gaming pipeline, right? As well as their ads and fintech recurring with the macro. I think regulatory is one area to really look at in terms of how the Chinese government is going to look into some of these fintech players. I think that's very important. Any news flow on that in terms of restrictions will actually impact the company. But so far, things have been quite positive. So in terms of dynamics, we do think that game approvals is one thing to look at. I think their IP strength is also improving, and Tencent is slightly moving beyond just a Chinese player. So you can see it's coming into the regional space as well. So this is something that is beneficial for the company in the longer term basis. Your WeChat ecosystem monetization is also quite interesting. I think we've heard about this super app for quite a while, whether it's from Asia, whether it's from, a lot of different companies, Meta and the rest is also trying to talk about it. But I think Tencent has done very strongly in creating the super app within the China ecosystem. And if they are able to bring that to the region, that will be something really exciting for the company. There is some regulatory risks. I think content, especially, I think the Chinese is actually moderating some of this content. So they do censor some of things that are more extreme in terms in their view. So these are areas that you want to look at, whether there's punishment or any fine that will be imposed on a company. So it is macro sensitive because it depends a lot on consumption and advertising. So in the event of a slowdown in the Chinese economy, this will actually affect the Tencent as well. Now, Baidu is the EV giant in China. I think they're the biggest, not just and they're also exporting beyond China. So if you look at in Singapore, even in Malaysia, in a lot of countries, you can actually see the brand there. So they are already successfully exporting out beyond China. So they are also the battery champions. So whether it's your passenger EVs, your buses, or your battery cells and packs. So these are positive news for the longer term, especially as we shift towards a more sustainable focus community, right? But the question is, I think if you look at recent, is the price competition in China that continues to eat into the margin. So this is one area that really impact BYD quite negatively, right? So the export expansion, all these are continuing on in a positive trajectory. But if your business model is not going to make money in the long run, investors will be afraid. So these are things that you want to look at in terms of how the margin and earnings are affected. I think so far, to be honest, I think cash flow remains positive for the company. So that's something that is more or less could soothe some of the worries that investors have. I think they also shared their battery tech roadmap, which is something that investors would want to look into. It's quite exciting how they look into Blade, the LFP variants, and some of the new innovation that they're introducing to the market. So the battery cost curve is another thing. I think as long as they are able to reduce their cost, and I think price competition will be beneficial to them since they are the biggest player in terms of their manufacturing as well as their capability. Policy incentives, forex as well as trade actions could affect margin. I think some of the concerns in terms of how if let's say the world were to enter into a more protectionist environment, how this will actually impact BYD, especially if let's say Europe, or the other markets will start to protect their own local car manufacturer players. The highlighted indexes, if you are worried and you're not sure how to play individual stocks, one of the easier ways to look at index rather than tap into specific stocks in the market, right? So one way to really do that is really to look at, say, for example, your Nasdaq 100. I think this is basically tracking the 100 largest non-financial companies listed on the Nasdaq stock market. Basically, it's a lot of your tech players. So your semiconductors are here, your cloud players are here, the internet, and a lot of your AI leaders are here. So key names include your Nvidia, Microsoft, Apple, Amazon, Meta, Tesla, Alphabet. So it's widely used as a barometer for US growth stocks. So usually when people look at growth stock, they do look at the NDX, right? So year to date, it has done very well, grow about 17%. Excuse me, driven by the AI and cloud strength. If you look at the July to September rally, it's mainly because of the strong earnings. So 91% of the members actually beat expectations. It is sensitive to your interest rate. So if let's say the Fed were to cut rate as per expectation, we do expect the market to move positively. But there could be a pullback if let's say the CPI or bond yield surprises on the other direction, right? So big tech earnings and your Fed policy moves are some of the biggest short-term drivers to keep an eye on. Okay, some strategy to look at taking advantage of the DLC. So some of these are quite basic strategy. So I guess markets could probably elaborate a bit more later on. But I guess the easy one is basically you could long your NDX DLC whenever you expect the Fed to signal some rate cuts, or if inflation prints were to be softer or earnings momentum is strong. So this worked well during the AI optimism cycle or when big tech are leading gains. So I think during the July to September period, if you are leveraging on the strong momentum in the tech sector, you could actually benefit quite a lot from that front, right? Another way is to short the NDX DLC. This could be done by deploying ahead of key macro data. So for example, if you think that CPI data has come out, it's going to yield on the high side, or it's going to be slightly more it's going to moderate slower than expectations, you could actually take advantage of that. Or you can hedge when valuation do look stretched or when geopolitical pressure tags. So for example, if there are a lot of uncertainties in the market today, you could actually take advantage of the short for the NDX DLCs to play in the near term. right? Intraday playbook, basically what it means is that you don't, you close your position before the end of the day. So one way to do it is really to just pre-position some of this in a small position before events, and then you scale it after just the first 15-minute move. By the end of the market, you probably wanted to close in order to avoid the US market gap risk. Another way is to pair your trade. One way to do it is you can long the HS tag. This is the Hang Seng Tech Index, and then you can short the NDX if, let's say, you think that the US tech is rallying far too ahead the Hong Kong tech sector, right? So of course you can do a reversal if, let's say, you think that the China and Hong Kong tech will get policy support while the US stall. Now, the Hang Seng Tech Index is basically the index that tracks the 30 largest tech and internet companies listed in Hong Kong. So the heavyweights include your Alibaba, your Tencent, your Meituan, JD.com, NetEase, and BYD. I think I mentioned some of them in earlier, like your Alibaba and Tencent. It was launched in 2020 as an answer to your Nasdaq 100, so it's high beta, but it's more volatile than the HSI, but it's pure play on your China's digital economy. So recent dynamics includes, if you look at the performance here today, is strong with big swings around your AI and cloud announcements. So it is quite volatile, right? Whenever there's a positive momentum or news flow, the index actually moved quite a fair bit. So there was a boost from the Alibaba 380 billion renminbi AI cloud plan that they announced, as well as the Tencent gaming pipeline. But it was dragged down by, for example, your subsidy wars within the Alibaba e-commerce space against your JD and Meituan, which actually spend heavily on discount. So this could actually eat into margin. It is sensitive to policy shift, so it is important to look at some of the antitrust and export control that are being announced. And some DLC strategies that you can really look at is you can long it the HS Tech DLC if, let's say, the AI or cloud headlines are strong, or if policy signals the support for the tech industry, right? During some of the subsidy wars, or if you look at the regulatory pressure on some of the discounts that the Chinese e-commerce players are playing, or some of the US tariff noise, you could actually short the index to take advantage of the movement in the near term. Aside from the Hang Seng Tech Index, there's also the Hang Seng Index. So this is basically your Hong Kong main benchmark. It has more than 80 companies. So in fact, Hang Seng Index has done very well this year. Year to date, it grew by about 34% as of September. So it recovered from its multi-year low. I think just prior to this, over the last 2 to 3 years, the Hong Kong market has been struggling quite a fair bit. So we've seen quite a lot of momentum this year, right, into your financials as well, your tech players as well. So we have seen a lot of that. Mainly due to the higher rates and dividends for the banks, and of course, your southbound flow into the Hong Kong market. The property sector remains weak, but it is stabilizing with some of the Chinese stimulus that are being announced. Cyclical sectors, your utilities industry will continue to provide cushion against tech volatility. So just to give a bit of basic, for those of you who do not know, this one is, so the difference between the Hang Seng and the Hang Seng Index, Hang Seng Tech Index. So the Hang Seng Index is less volatile compared to your the Hang Seng Index is less volatile compared to your Hang Seng Tech Index. So mainly because it's not so much of the tech, did not consist too much of your tech companies. It also has larger companies, so it's about 80 companies within the index itself. So you have your financials, they provide a bit more stability on that front. So those are the key difference between the Hang Seng as well as your Hang Seng Tech Index. Just to look at this one, if you look at the rotation play at the last part here, right, you could actually long your Hang Seng Index and short your Hang Seng Tech Index when you think that the financial or industrial will outperform your tech players, for example. So in the event of hedging, so you could actually use your Hang Seng Index short to cover some of your Hong Kong portfolio risk around some of the FOMC and China GDP prints. So these are some of the ways that you can actually play the market, take advantage of the market movement through DLCs. All right, some DLC strategies that I wanted to share before I pass the time to Marcus, just a quick one. So just look at this one. If you're looking at the US DLC, for example, you can look at AI momentum play. So if you look at Nvidia, so if you think that it's gonna announce some of the strong earnings, which we do expect to see that happening in, I think, in November. So the AI capex announcement, as well as a Fed dovish signal, which we expect the Fed to continue to cut rate in October and to another rate cut towards the end of the year. So you could actually take advantage of this to long the DLCs, right? But if you're not sure about the macro data that's coming out, for example, you could actually short the Nvidia or the NDX DLCs. EV transition, I think for Tesla, delivery beats, if let's say if you look at the car deliveries that they announced and you think that it will beat expectations as well as the energy storage growth, then you can actually take a long position on the company, right? But of course, I think the current headline that is dominating is more on the price pressure and the margin that is affecting Tesla. So in this instance, you could probably short Tesla to take advantage of that movement in the near term. For Meta, I think ad revenue strength, your AI ad tool adoption and smart glasses continue to gain traction. So that's where you probably want to long the Meta DLCs. But of course, if let's say our guidance softens and if you look at the regulatory shocks as well as some of the news that are coming up that are more negative for the tech space, then you probably want to take a short position on that. So some tactical playbook, and easy one is basically you can pre-position light before an event and scale after 15 minutes confirmation, right? So you just set it a lighter position before the event is confirmed, and you can actually scale it after 15 minutes confirmation. But of course, do close the position before the end of market to sort of avoid the US overnight gap risk, because you might not know what news announcement is going to be announced in the US, especially with Donald Trump, right? He usually use Twitter to announce some of the new policy as well as know the news. Hong Kong DLC strategy, so you can see your focus name. Just now we talked about Alibaba, Tencent, BYD, HS Tech, and HSI. So you can actually, it's quite similar. If let's say you think that there's a bit more positivity in terms of the spending on your capital, your capex, especially for the AI space, you could actually long your Alibaba. If let's say the subsidy wars is going to affect your earnings, then you could actually short your DLCs, right? So I'm not going to spend so much time on this. In terms of index angle, so for example, you can, for HS Tech DLCs, you could actually long your AI, your cloud push, or short on regulation, and then there's a lot of subsidy noise, right? So it's basically just taking advantage of some of the news flow and leverage on the market movement for during that near-term period of time. And for HSI DLCs, you could actually long whenever the Chinese policy eases. But if there is announcement on the stress, especially on the property front and your growth increase in terms of your interest rate environment, then you could probably want to take a short position. Right, I think that's all on my end. Marcus, are you ready?
Okay. All right, thank you very much, Billy. That was very comprehensive. There was a lot of content there, and I think definitely very exciting. Even finding angles from a fundamental standpoint on how to trade the DLCs, that's something very interesting. Okay, so now my part is really about the product, the one that Billy mentioned, the DLCs. DLC stands for Daily Leverage Certificates. All right, so this one in the next 20 minutes, I would like to give a quick introduction on what the Daily Leverage Certificates are. You know, what are features, what are the benefits, what are the risks, etc. On the DLCs. And then maybe about 5 minutes to 10 minutes, I would like to go through our website, dlc.socgn.com. All right, so we have a website for the DLCs, and I want to give you guys a tour of a website where you can find more information, etc. All right, so please let me know if you cannot hear me anything, put it in the chat. But otherwise, hope you guys can find this interesting on this product, Daily Leverage Certificates. All right, so my name is Marcus. I'm from Society General. We are the issuer of these Daily Leverage Certificates that are listed on the SGX securities market. All right, so we have been around for quite long, about 8 years on the SGX securities market already. All right, so we're going 8 years strong on this product, DLCs. And we've expanded the shelf over the years to cover a wide range of underlying assets. Right, these daily leverage certificates are short-term trading instruments. All right, so it's not a buy and hold kind of investment instrument like an ETF, etc. This is more a short-term trading instrument. All right, but it is also not an option nor a warrant. All right, it's not like a option or a warrant kind of product. This kind of product, DLCs, is very much more similar to a leverage and inverse ETF. All right, this is not an ETF, so you don't buy and hold this kind of instrument, not a long-term buy and hold vehicle. But it is, the payoff is very much similar to your leverage and inverse ETFs. So for those of you who trade the TQQQ or the SQQQ in the US, right? The ProShares Ultra Nasdaq 3 times long or 3 times short ETFs in the US, the TQQQ or the SQQQ, well, these DLCs have exactly the same kind of payoff as your leverage and inverse ETF. All right. It's just that it goes higher, just that we can go higher in terms of leverage because we are in a certificate structure and we are not in a ETF structure. All right. But otherwise, similar to LNI ETFs, these DLCs have a fixed daily leverage payoff. There is a long DLC or a short DLC. All right. So you can either take a long position if you're bullish by buying the long DLC, or you can take a short position by buying the short DLC if you are bearish on the underlying. All right. And the DLCs will give you that kind of 3 times, 5 times, or 7 times leverage on the underlying stock or underlying index daily percentage performance. Right, very much similar to your LNI ETFs, but most leverage and inverse ETFs in the world, they're usually kept around 2 times or 3 times leverage only because they are in an ETF structure. But for the DLCs, because we are in a certificate structure, all right, we can go higher in terms of leverage. We go up to 7 times for indices and up to 5 times for single stocks. Right, and these DLCs are all listed on the SGX securities market. All right, so those of you who are in Singapore, any regular stock brokerage account, you can access the DLCs. In those of you who are in Malaysia, those brokerage accounts that you have in Malaysia that offer you SGX market access, including CGS International, you can find the DLCs in the same trading platform as well. On the where we can find the SGX market, and the same way that you trade your DBS shares or your UOB shares, you can trade the DLCs on the SGX securities market via your brokerage account as well. All right, so you don't need to open an account with SocGen. All right, as long as you have a brokerage account that offers you SGX market access, you will be able to find the DLCs in there, and you can trade the DLCs on that brokerage trading platform the same way that you would trade any other Singapore shares. All right, SocGen, we are the issuer. All right, we issue these products and we list it on the SGX, and we are also the designated market maker. All right, which means that we provide liquidity on each and every one of our DLCs throughout the trading day for investors to buy and sell the DLCs. All right, when I say provide liquidity, it means that we're offering that bid and ask prices, bid and ask volumes throughout the trading day for investors to buy and sell the DLCs. So a common misconception that people might have is that, we have almost 200 DLCs listed on the SGX, but not every single one of them are traded every day. All right, some days your Alibaba DLCs could be very hot, high trading volume, but your Kuaishou DLC for today, for example, no one wants to trade the Kuaishou DLC, so there's zero traded value. But it doesn't mean that the Kuaishou DLC has no liquidity. All right, that's not true. Right, even though there's zero traded value on the Kuaishou DLC today, but SocGen, we are still providing liquidity in the bid and ask prices, bid and ask volumes on each side for investors to buy and sell that Kuaishou DLC. All right, so when it comes to the liquidity of the DLC, it's important to look at the bid and ask prices and bid and ask volumes. That's where the liquidity is, and that's where SocGen is providing that liquidity throughout the trading day for you to trade the DLCs. So we've been around for 8 years on the SGX market. We've expanded the shelf from just 10 DLCs 8 years ago to now 200 DLCs listed on the SGX. And we cover a wide range of market across the Hong Kong, Singapore, and the US market. All right. So on the Hong Kong side, which is our most popular shelf, all right, a lot of people use the DLCs to gain exposure to Hong Kong indices and Hong Kong single stocks because this DLC is a very efficient instrument for trading the Hong Kong market. All right. So we have the Hang Seng Index DLCs, we have Hang Seng Tech DLCs, as well as the Hang Seng China Enterprises Index DLCs. All right. And for the single stocks wise on the Hong Kong shelf, we have your China tech giants, your Tencent, Alibaba, Meituan, BYD, Kuaishou, Xiaomi, etc. Even the old economy stocks like Ping An, HSBC, we do have DLCs on them as well. On the Singapore underlying, there we have the MSCI Singapore Index DLCs, and the single stock DLCs, we have the main Singapore blue chip counters, your 3 Singapore banks, plus your Capcorp, Sembcorp, etc. We do have the DLCs on them. All right. So on the index DLC shelf, all right, we go up to 7 times leverage. So 7 times leverage is the max for the index underlying DLCs. For the single stock underlying DLCs, the maximum leverage that is offered is 5 times leverage. All right, so you have 5 times long, 5 times short DLCs on the Hong Kong and Singapore single stocks. On the US shelf, which is quite recent, all right, we've only expanded into the US underlying market in recent years, all right, with the 3 key US indices, Nasdaq, S&P, Dow Jones, we have the up to 7 times long and short DLCs on them, all right, and on the US single stock shelf, the Magnificent 7 stocks, we only started this last year, all right, and this is something that is quite interesting because it offers you that Asian hour exposure. All right, it offers you a new trading window during Asian hours, 9 a.m. to 5 p.m. Singapore time. you can trade this Magnificent 7 stock DLCs, all right, at a 3 times long or 3 times short with that 3 times long or 3 times short exposure. So we have 3 times long DLCs and 3 times short DLCs on each and every one of the Magnificent 7 stocks. So you can gain exposure to Tesla with a 3 times long exposure or a 3 times short exposure during Asian hours, during SGX market hours, 9 AM to 5 PM. All right, so this is something interesting, and it's really quite a first of its kind in Asia, where you can get that 3 times long, 3 times short exposure to the Magnificent 7 stocks during Asian hours. All right, so I mentioned that the DLCs are very much similar to a leverage and inverse ETFs. So the payoff is as simple as this, where the daily percentage performance of the underlying asset multiplied by the leverage factor, whether it's 3 times, 5 times, or 7 times, will equals to the daily percentage performance of the DLC. All right, so this example over here, you can see that DBS is up by 2% on day 2 versus its previous close day 1, right? So it's up 2% day 2 versus day 1. On a close-to-close basis, it's up 2%. My 5 times long DBS DLC will be up by 10%. All right, 2% times by 5 equals to 10%. While my 5 times short DBS DLC will be down by 10%. So your gains are magnified by the leverage factor, but so are your losses as well. So this is a leverage instrument. Leverage is a double-edged sword, so you have to understand that your gains can be magnified, but so is your losses as well. Okay, so conversely, if DBS was down by 2% instead from day 2 versus day 1, then my 5 times long DBS DLC will be down by 10%, while my 5 times short DBS DLC will be up by 10%. All right, so that happens every day on a close-to-close basis. The DLCs will give you that 5 times performance of the underlying stocks daily percentage performance. All right, just look here. Some examples are, this is the Alibaba long DLC DKPW. All right, so you can see over here that where the 5 times performance is. Right, on this particular day, on 14th of March, the Alibaba stock listed on Hong Kong was up by 3.5% intraday, right? 3.5% up versus its previous day close. So my long Alibaba DLC, 5 times long Alibaba DLC DKPW was up around 17 to 18%, 5 times that of the underlying stocks daily percentage performance. So that's where the 5 times is. Every day on a close-to-close basis, the DLC will give you that the 5 times long DLC will give you that 5 times performance of Alibaba's daily percentage performance. All right, but of course, if you got the wrong direction wrong, you bought the Alibaba short DLC, then you would be sitting on 17 to 18% worth of losses. All right, so the same Alibaba was up around 3.5, 3.7% on this particular day on 14th of March, and the short Alibaba DLC was down around 17 to 18%, 5 times that of the underlying stocks daily percentage performance. All right, so this is where the 5 times performance of the DLC is. All right, for 5 times DLC, and this is every day you will get that same 5 times performance of the underlying stocks daily percentage performance. All right, so the name of the DLC you can see at the top over there. So this is the Alibaba short DLC. So Z7MW, that 4-character stock code. That's the stock code of the DLC. Every DLC will have a 4-character stock code. All right, so you can go into your brokerage trading platform and you search for Z7MW. You will be able to find this Alibaba short DLC. All right, the name over there, the name will always start with the underlying asset that it tracks. Whether is it the Alibaba, whether is it Hang Seng Tech, whether is it Hang Seng Index, the name of the underlying asset that the DLC tracks will be at the front of the name, followed by the leverage factor, whether is it 3 times, 5 times, or 7 times DLC, and whether this is a long DLC or a short DLC. So this one is a short DLC, followed by SG. SG stands for Society General. We are the issuer of this DLC. And then the expiry date in year, month, date format. All right, so this DLC will expire on 9th March 2027. Okay. All right. So Billy mentioned some trading strategies over there in his segment as well for the DLCs. So definitely he captured most of it. You can use the DLCs for day trading, for swing trading, or even for some hedging purposes as well. All right. So let's look at some examples over here. These DLCs are very popular for intraday trades. All right, there's a lot of intraday trading on our DLCs, maybe because of the leverage factor. For Hong Kong underlyings, it can be quite volatile. Single stocks can move 5%, 4% a day, times by 5, that's 20 to 25% a day. Index, Hang Seng Index can move 3 to 4% a day, possibly even 3%. Times by 7 times leverage, that's 20+%. So there's a lot of trading opportunities intraday on the DLCs with that kind of leverage that it provides. Right, so this Hang Seng 7 times long DLC gained around 17 to 18% on this particular day, intraday trade on the 14th of March on the back of Hang Seng Index gaining 2.4% intraday. All right, so if you bought in the morning at a low price of $2. Let me see, 190. If you bought it at 190 and then you sell it in the afternoon at 223, you could be sitting on double-digit gains already for an intraday trade. All right. So Hang Seng Tech DLCs are our most popular DLCs. That has usually the highest turnover. Our Hang Seng Tech Index DLC followed by our Hang Seng Index DLCs. So a lot of people do use our 7 times long, 7 times short, 5 times long, 5 times short Hang Seng Tech DLCs to trade these Hang Seng Tech Index. All right. Of course, if you're not an intraday trader, you're not a scalper kind of sense, you could look at using the DLCs for a nice swing trade. All right. And that's where some of the DLCs could work very well for you as well because of the compounding effect feature, which I will explain in a bit. All right. But if you manage to capture a nice trending market, whether it's a nice uptrend, you buy the long DLC, or is it a nice downtrend, you buy the short DLC, you could be sitting on some very nice gains if you manage to capture a nice trend. All right, so this example of Xpeng long DLC. All right, so the Xpeng long DLC VTMW. All right, this holding period of 1 month. All right, in this 1 month period, when Xpeng stock listed on Hong Kong Hong Kong 9868.Hong Kong, gained 43% in this 1 month period. This 5 times long Xpeng DLC gained 295% during this 1 month period. All right, so this is quite amazing. 295% gain in that 1 month period on the back of Xpeng gaining 43.5%. For those of you who are sharp, you might see, hey, Xpeng gained 43%. Times by 5, at most that's 220% gain, right? But why is the VTMW up 295%? All right, that's where the compounding effect feature of the DLC kicks in. All right, if you manage to capture a nice trending market like this, the DLC with its compounding effect feature can give you that kind of compounded gains and give you more than the 5 times leverage if you manage to capture a nice uptrend or a nice downtrend. All right, so this is something I'll touch on in a bit, but swing trading is quite nice for the DLC if you're able to capture a nice trending market. But again, this is a short-term instrument, all right? So this 1 month holding period, I would say, is the maximum. We generally recommend investors that you should be trading the DLCs on an intraday basis, a few days or a few weeks, but definitely please do not hold the DLCs for months at end or even a year, okay? This is a short-term trading instrument. And lastly, okay, those of you who are, not so much looking at, trading the markets, etc., but you're holding some shares on the Tesla, DBS, or Nvidia, etc., and you see an impending correction coming, this short DLC instrument could also be something that you can use as part of your portfolio for a short-term hedge. All right. So this Tesla short DLC, TSXW, gained 200% during this 1 month period on the back of Tesla declining 37% during this 1 month period. All right. So if Tesla share price indeed crash, you could have bought the short DLC to make some of the gains, and you could use these gains to offset your paper losses on your long-term buy and hold Tesla shares that you're not going to sell. All right. So definitely, this short DLCs is useful for someone who, or maybe more sophisticated investor who want to use some hedging strategy in your portfolio. All right. But hedging is not easy. You got to be careful on that. You need to understand what your exposure is and try to match it with it. So definitely, do exercise caution when you're using these short DLCs for hedging purposes. But otherwise, short DLCs would be ideal. Definitely, we don't advise anyone to go and naked short shares in the market, etc., because your losses could be unlimited. All right. Really, if you're a naked short in the market, your losses could be unlimited if the underlying goes adversely against you. But if you use a short DLC, instrument like this, a short DLC, your maximum loss is capped at your initial investment. All right. So if you put in $1,000, you buy $1,000 worth of Tesla short DLCs, the maximum you can lose on this is 100%. All right. Yes, 100%, no joke, but that's the maximum you can lose. Even if Tesla share price started to rise 50%, 50% times by 3 is 150%, but you will not lose 150%. All right. The maximum you can lose on a DLC is only your initial investment, which is that 100% of your capital that you put in to buy the DLC. All right. That is because these DLCs are securitized instruments, right? You cannot lose more than your initial investment. All right, so the US stock DLC is something that we launched quite recently on the Max 7 stock DLCs. This is our range so far. All right, we have the Max 7 stock DLCs. We have 3 times long, 3 times short on each and every one of the Max 7 stocks. All right, and we'll have it in SGD denominated or as well as in US denominated. So if you want to long Tesla in Singapore dollar currency, you will buy the TSYW. All right, but if you want to, hang on. if you want to buy the 3 times long Tesla DLC in US dollar, you will buy the TSTW. All right, so you look for the stock code, and there is a Singapore dollar currency one and a US dollar currency one, depending on which one you prefer to use. All right. So the 3 times the US stock DLCs is quite interesting because it offers you that Asian hour trading window. All right. During Asian hours, you can get that 3 times long, 3 times short exposure to the underlying US stock. All right. So for example, there's any high impact news during Asian hours, or even like earnings results. After earnings results, it reacts in a post market. By the time you wake up, etc., post market is closed. By 9 a.m. Singapore time, you can initiate a position to the US Magnificent 7 stock. All right. So if the underlying US stock announced better than expected earnings results in the post market, and you think that the momentum will keep continuing into the US market open the next day, right? But you want to gain early ahead, you can buy the 3 times long US stock DLC at 9 a.m. Singapore time, just after the post-market session ends. 9 a.m. Singapore time, you can get in ahead of the US market open with that 3 times long DLC at 9 a.m. Right? So there are also opportunities during Asian hours, in case of any high impact news, etc. Of course, the US election day doesn't happen every time, every year, or very often. But this example over here is Tesla share price during Asian hours already started to move on this US election day last year, 6 November. During Asian hours, Tesla was already up 10% during Asian hours. All right, if you waited until the US market open, you would have missed out on this 10% move on Tesla. All right, but if you bought the TSYW, the 3 times long DLC at 9 a.m. Singapore time on 6th of November, you will be sitting on 30% gain already in an intraday trade because the TSYW gained 30% on the back of the Tesla share price rising 10%. Right? So opportunities during Asian hours, is you can use the 3 times long, 3 times short DLCs to also gain exposure to the US stocks, or even the US indices on the Nasdaq, S&P, or Dow Jones. All right. The most important feature about the DLCs, the compounding effect feature, I want to touch on this before I move to the website. It is the single most important feature for any leverage and inverse products out there. For your TQQQ, SQQQ in the US, leverage and inverse ETFs in the US, they also have this compounding effect feature. All right. So the DLCs also have this compounding effect feature because of its fixed leverage payoffs. All right. This compounding effect can work for you in a nice trending market, or it can work against you in a sideways or volatile market. So on the table on the left over here, you can see that the underlying is up for 3 consecutive days, up 1% on day 1, up 2% on day 2, and up another 2% on day 3. Cumulatively, the underlying is up by 5% over the 3-day period. The 5 times DLC, every day I give you that 5 times performance. Every day you get that 5% on day 1, 10% on day 2, another 10% gain on day 3. And cumulatively, it is up by 27%. All right, 5% times by 5 is 25%. But this DLC generated a cumulative return of 27% over this 3-day period because of the compounding effect, right? The extra 2% kicker is from the compounded gains. The 10% gain on day 2 is based off a higher base of $2.63. The 10% gain on day 3 is based off a higher base of $2.89. So you have that compounded gains. If you manage to capture a nice uptrend like this, you would have gotten more than the 5 times leverage because of the compounding effect or compounded gains on the DLCs in a nice trending market. All right, so that's the example of how the Xpeng DLC managed to gain 300% during that 1 month period, even though the underlying Xpeng stock only gained 43%, right? More than a 5 times performance because of the compounding effect. All right, but the compounding effect will work against you in a sideways or volatile market like the table on the right over here. All right, the underlying is up by 2% on day 1, down by 4% on day 2, and then rebounds back by 7.31% on day 3. Cumulatively, it also makes a 5% gain over the 3-day period. But on the DLC, every day you get the same 5 times performance. Day 1 up 10%, day 2 down 20%, day 3 up 37%. But cumulatively, it only gained 20%, less than the 5 times performance, right? Because of the compounded effect. All right, on the day 2, the losses are locked in, and then the day 3 rebound of 37% is based off a lower base on day 2 close. Therefore, you get less than the 5 times performance cumulatively. All right, so this is another reason why also I keep telling you guys that this is a short-term trading instrument. It is not a long-term buy and hold instrument because of the compounding effect. In the long run, generally markets are sideways at best. Whatever goes up must come down, whatever goes down must come up. So the longer you hold the DLC, the more you are being susceptible that this is going to become a sideways market. And compounding effect does not work well for you in a sideways or volatile market. All right. So it works best in a short-term, nice trading market where you have a bit more visibility, a bit more conviction, a bit more confidence on the trend. Then this DLC will work best for you in a short-term trade. Intraday, a few days or a few weeks. All right. Please do not hold on to the DLCs for months or even a year. All right. This is a short-term trading instrument. Okay. So just before I go on to the website, last recap. This DLC is a instrument that is traded on the exchange. It's traded on the SGX market, SGX securities market. It is not a margin product like CFD. So there's no risk of margin call. You cannot lose more than your initial capital. All right. You put in $1,000 to buy the DLCs. The maximum you can lose is $1,000. Even if the underlying moves adversely against you, all right, the maximum you can lose is 100%. This is not a warrant. This is not an option type product. There is no time decay. There's no impact volatility. There's no strike price. There's no out the money, in the money, at the money kind of concept. This is purely a fixed leverage product where you get that same 3 times, 5 times, 7 times performance on the underlying stock or underlying index, daily percentage performance every day on a close-to-close basis, very much similar to a leverage and inverse ETF. All right, so now quickly, I'll just show you guys our website, dlc.socgen.com, because I know I can't cover everything today, but I hope you guys can visit our website, dlc.socgen.com. Let me try and change the share screen. All right. So let me share it, this. Okay, so I hope you guys can see the website, dlc.socgen.com. This is our DLC website over here. All right, so we have this website, dlc.socgen.com over here. Okay, so this is our website. Under the homepage, you can find some of the top gainers, top losers, etc. But to find the full list of DLCs that we have, you can go under products. Okay, so under products, you can find the full list of DLCs that we have over here. All right, so today a lot of the indices are quite heavily traded. All right, but we do have quite a wide range of underlying that you can choose from across the Singapore, Hong Kong, and the US market. All right, so just looking at Alibaba, for example, on one of the cases that examples that Billy gave. So Alibaba, if you want to choose Alibaba, if you want to long Alibaba DLCs, you can choose the long Alibaba DLC over here. So remember, if you are bullish on Alibaba, you'll buy the long DLC. If you are bearish, you'll buy the short DLC. All right. And we have 3 times, 5 times on Alibaba DLC. Let's look at the 5 times. Okay. So we have 2 of the long Alibaba DLCs. Let me look into one of them first. All right. So let's look into the ZVNW. All right. So Alibaba long DLC gained 12% today, around there, on the back of the Alibaba getting about 2+%. All right. So that's where the 5 times performance is. But let's look at the 1 month period. Alibaba has been on a stellar bull run. All right. So you can see over here, ZVNW, our 5 times long Alibaba DLC, gained 188% in the last 1 month period on the back of Alibaba gaining 29%. All right. So 29% times by 5 is about 150%, but this DLC managed to gain 188% across this 1 month period. Even within the last 5 days, I think Alibaba has been doing quite well. All right. So Alibaba gained about 11%. 0.5%, and the DLC gained about 53.5%. All right, so that's the Alibaba DLC. We go back to the previous screen. So those of you who I'm pretty sure the natural question is, why is there 2 Alibaba long DLC? All right, so there's 2 Alibaba long DLCs. Some of the underlyings we will have multiple, like long DLCs on the bigger underlying, multiple short DLCs on the underlying. The only difference, they are the same. All right, these 2 5 times long Alibaba DLCs will give you that same 5 times performance on the underlying stocks, daily percentage performance, just that they are at different prices. Okay, one is at $4.45, one is at $5. All right, so usually when a DLC drops to a low price or when a GLC is expiring soon, so this one's going to expire on 13 November, we will issue a new one at a better price and with a longer maturity for investors to choose. And then usually it's at a higher sensitivity as well. So we'll put a rate star indicator. So if you're in doubt on which Alibaba long DLC to choose, always look out for the rate star indicator. Similar for any other lines, we'll always point out what is the most sensitive one. So you can choose for Tencent, this is ZS6W is the one that you should choose. On the Alibaba one, it should be the ZVNW. All right. So always look out for the red star indicator. This tells you which is the most sensitive DLC. It also takes into account the expiry, etc., to make sure that you select the right DLC for your target exposure. All right. So this ZVNW. All right. This DLC is a more sensitive DLC. All right. So for every 8 cents move, 7.8 cents move on this Alibaba stock price, this DLC will move by 1 tick size, and 1 tick over here is 1 cent. All right. Whereas for DKPW, every 42 cents move, all right, on Alibaba stock, then this will move, DKP will move by 1 tick, which over here, 1 tick over here is 0.005, right? Half a cent. Okay. So over here, half a cent as a percentage of 46 cents is a bigger percentage as compared to 1 cent over here divided by $5. Therefore, this DLC ZVNW is a much more sensitive DLC. For a given move on Alibaba stock, ZVNW will move more number of ticks versus DKPW. All right, even though both will move 5 times that of the underlying stock's daily percentage performance, but ZVNW will move more number of ticks, so it's more sensitive as compared to DKPW. And as a trader or an active trader, you want as wide a trading range as possible so that you can have multiple entry and exit options on the DLC. All right, so always look out for the red star indicator for the more sensitive one. But otherwise, both Alibaba long DLCs will give you that same 5 times performance of the underlying stock's daily percentage performance. All right, so just now also we look at Tesla. All right, this Tesla we don't have 5 times, we only have 3 times leverage over here. All right, so Tesla, you have one with the US dollar sign at the back. I mentioned is the US dollar currency one, while the one over here at the without the US dollar currency is the Singapore dollar currency one. All right, so TSYW is the 3 times long Tesla DLC. Again, Tesla has been on quite a nice bull run. All right, so in the last 1 month period, Tesla gained about 32%, and the TSYW gained about 116%. All right, in the last 5-day period, not so much, not that great. All right, so how about last 2 days? This one, okay, Tesla gained 6%. This one gained 16%. Intraday, not much activity during Asian hours. All right, but otherwise, we will publish the Asian hour price of Tesla over here. All right, so this was the price of Tesla as of 5 p.m. Singapore time this afternoon. It closed at 5 p.m. Singapore market. So we last print on this Tesla was $441.52. All right, so we will display the Asian hour price of Tesla shares over here, and that's what the share price that this DLC tracks. Okay, so we have the Tesla DLCs over here. We have a dedicated tab for our US market as well on the US indices, US stocks. So you can find the full list of US DLCs that we have here. Videos on how does the US stock DLCs work, how does the US indices DLC work, all right, as well as some FAQs at the back of the page on how the DLCs work, how the US stock DLCs work in particular during Asian hours, given that the US market is closed, right, during Asian hours. All right, so please do check out our US market tab as well over here. Of course, education is where you can find more resources or illustrations on the DLCs. All right, how does the compounding effect work, and other kind of educational information, including videos as well. Okay, but otherwise, please visit our website dlc.socgn.com. If you have any questions at all, please do not hesitate to call our hotline at 6226-2828. Give us a call. This is a Singapore number, unfortunately. For those of you who are in Malaysia, but you can still call. But otherwise, feel free to drop us a note on our contact us form. We'll be happy to give you a call back. We'll be happy to answer any questions that you have on the DLCs. All right. I think that's all I have. Please visit our website dlc.socgen.com to learn more about the DLCs, and I hope you found this product interesting. Thank you.
Hi, Marcus. So there are actually some questions in the Q&A. So I think just now you also mentioned about these. The first question is, can we hold DLC overnight? What are the consequences? Just now you actually shared on this also. So do you want to reshare it again, or we pass to the next question?
The holding period, right? So I think just just to emphasize this, right? That the DLCs is a short-term trading instrument. So intraday, a few days or a few weeks, but please do not buy and hold the DLCs for months at end or even a year. It is a short-term trading instrument, all right? And the expiry date does not affect the performance of the DLC, just to clarify that, all right? Your TQQQ, SQQQ, your leverage inverse ETFs in the US, they don't have any expiry date, right? They're open-ended. Technically, the DLCs can also be open-ended, right? There's no expiry date. But unfortunately, due to the regulations on the SGX side, we have to have a expiry date for the DLCs, but they're usually 1 year, 2 years, or 3 years expiry. At 2 years or 3 years expiry usually. All right.
Yep.
And whatever the value of the DLC is, 1 day before the expiry date, we will cash settle back the value of the DLC back to holders via the SGX CDP. All right. So if you buy the DLC today, $1, and tomorrow is expiry date, we will cash settle back the $1 back to you via the SGX CDP. All right. So unlike options or unlike warrants, there is no like expire out of the money kind of thing. All right. This is whatever the value is at the end of the expiry, we'll just cash settle back the value of the DLC back to holders via the SGX CDP. Okay.
Okay, there are actually quite some few questions about DLC, but before that, let's check with BD first. All right, so there's one user asking, given the current environment of Federal Reserve rate cut, which investment offer that most favorable risk reward ratio, REITs, US Treasury bond, or other options? Any views on that, BD?
Yeah, I mean, firstly, there's no perfect answer to this. I think it depends a lot on the risk appetite as well as the preference, right? But just to put into context, I think personally for REITs, for example, it's quite straightforward. A lower rates reduce your interest costs, so improving net income. So valuation multiples tend to re-expand as well. So investors are looking for you will find it more attractive as well to invest into REITs. So in general, a rate cut cycle will benefit your REITs players. So which is why that's more or less a given. But if you're looking for something that's more aggressive, I would think probably the equity space would probably be something that you'll be more interested in, because the rate cut do provide a bit of growth support, especially for some of the tech players as well. With a bit more risk appetite in the market, I do think that if the Fed were to continue to cut interest rate in October, and then we should see a bit more aggressive in terms of the investment flow into the tech players as well. Of course, this depends a lot on the overall macro environment as well. In terms of your yield, I think it's quite subjective, because if you were to fall sharply, your long bonds can do really hard, right? But there is quite, because your yield, there's also the risk if inflation or growth surprise on the upside, then your yield reprice higher, and that could lead to a sharp losses. So personally, I would recommend to go with REITs and with equity and a bit of REITs. I don't really I wouldn't really go for the treasuries lah. So that would be my preference. Yeah.
Thanks, BD. All right. So Marcus, back to you. Trading 24 hours per day. There's one user asking about this.
Yeah.
No.
I wish but this is I would love to have a night dealing desk, etc. But this subject, unfortunately, the products are listed on the SGX securities market, and for us to do 24 hours a day, SGX has to do something to their infrastructure, and that is not something that can be done easily. But we are exploring options. We understand that the US stock DLCs, a lot of people have, they like the idea, this kind of 3 times long, 3 times short on the US stock. They like the idea of Asian hour exposure, but when it comes to nighttime, how? Am I flying blind? All right, there is that overnight gap risk that Billy mentioned. That's real. All right, so investors have to be comfortable with that if you're trading the US stock DLCs. But we are trying to find perhaps mitigating factors or some solutions to offer maybe a nighttime sort of exit or entry options. We are exploring that. But for now, you have to be comfortable with that overnight gap risk. All right.
All right. So there's one question is, can we buy or sell DLC at Society General website? The answer is no. You need to buy via brokers.
Yes,
right?
especially
So
EGS International.
yes, correct. So the answer is no. All right. So what is lot size for DLC?
Same as Singapore shares, 100 units.
Okay. So is there time decay for DLC? So I think just now Marcus also mentioned about this.
Yeah, there's no time decay on the DLCs, but I want to clarify here that there is an overnight funding cost. As with all leverage products, we need to fund that leverage. All right, 5 times leverage. All right, we need to fund you that 4 times. All right, so there is an overnight funding cost that is applied to the DLCs every night. If you trade the DLCs intraday, you buy in the morning, sell in the afternoon before exchange market close, no overnight charge, no funding cost. You just pay the broker commissions and the spread, and that's it. But if you hold the DLCs overnight, there is a funding cost that is deducted from the price of the DLC every day. All right. So if you buy the DLC today at $1 and you hold overnight, technically, and I'm assuming that next morning when the market open, the underlying that has no change, the DLC technically is only worth 0.999995 something, for example. All right. So
Okay.
the overnight cost is deducted from the price of the product. It is not charged separately to investors. And this overnight funding cost is fixed every day. Every day you get the same fixed amount. There's no such thing as accelerating towards expiry like time decay. So it's a fixed overnight cost. And we disclose it on our website every day. Under each of the product DLC, you will find their daily cost. We do share what is the daily cost every day on our website.
Okay, so the last question, I think he is actually asking, can he use CFD to buy?
No.
Okay. So I think he's asking about this because the question is not very clear. All right, but the answer is no. All right. All right. So I think today is a very great session that we have Billy to share, and also Marcus to a very comprehensive explanation as well on the DLC and also the information that you need to know. All right. So Billy or Marcus, any last things that you want to share before we end today's session?
I think I just want to add this. I think the DLCs work in a lot of favor for those who want to take risks because your upside risk is higher, but your low downside risk is more or less capped with the capital that you're investing. So that gives you that sort of advantage to, you know, to take a bit of risk if you wanted to, if you think that, you know, you have a certain position that you're quite convinced of at that point in time. Yeah.
Thanks, Billy. Marcus?
I concur with Billy.
All right.
Yeah. Basically, you
Yeah.
cannot lose more than your invested amount, but your upside is unlimited. So compared to some of the other margin type products out there, this is one of the upside for the DLCs. And really, to trade Hong Kong market, it's not cheap. So there's also that efficiency on the DLCs because you're trading the DLCs in Singapore dollar currency. You're trading it based on SGX exchange fees, which is very cheap. It's the DLC exchange fees for SGX is 8 times cheaper than the Singapore shares. So your exchange fees for DBS shares is 4 bips, but the DLCs is 8 times cheaper than trading the DBS shares. So exchange fees is cheaper. There's no stamp duty, etc. like Hong Kong exchange, but you can gain exposure to the Hong Kong stock exposure using the DLC system on SGX. So yeah, it's no-brainer that our most popular shelf has been the Hong Kong indices DLC. All right.
Okay. I think there's one question from Park Sung Ling. How is the settlement like?
T+2, same as Singapore shares.
Yep. All right. So thank you.
Yeah, those of you who have access to contra trading, yeah, you can contra trade the DLCs as well.
All right. Thanks, Marcus, and thanks, Billy. Thank you everyone for joining for these sessions. I think today's session is a very fruitful sessions, and hopefully you learn something. And if you are looking for the recording and you want to rewatch this, you can actually go to Investing Note Malaysia, and we're actually live streaming today as well, so you're able to find the replay session over there. All right. So thank you everyone and good night. We will see you in our next webinar. All right. Thank you, Billy. Thank you, Marcus. Have a good
Thanks,
night.
Darren.
Thank you,
Thanks,
Aaron.
Billy. Thank you so much.
Thank
Thanks,
you.
everyone.
Bye-bye.
Good evening.
Bye. Bye.